Bitcoin pumped to over 30K last week for the first time since April. The surge is largely related to a regulatory filing by Blackrock, the world's largest asset manager, to launch a spot Bitcoin ETF. So, why is this a big deal? What does it mean for BTC's price? And, the big question, is the ETF likely to be approved? These are some of the questions we'll be answering in this video. But first, if you're new to this bureau, welcome. My name's Guy. Entertainment and high-quality crypto content are what I supply. I will share plenty today, but don't mistake it for financial advice. I aim to share knowledge and insights and news to entice. So, subscribe and hit that bell and hear the crypto news we tell. Right, back to the story. First, a bit of context. If you're familiar with ETFs and how they work, feel free to jump ahead to the next section using the timestamps below. Now, ETFs, or exchange-traded funds, represent an easy way to invest in assets without actually having to hold those assets. They trade on stock exchanges and generally track a specific index, for example, the S&P 500. Now, buying shares in an S&P 500 ETF gives you exposure to the top 500 companies in the United States without you having to go and buy shares in every single one. The ETF provider does that in the background. For traditional investors seeking to get exposure to Bitcoin, an ETF offers two key incentives. First, it simplifies the buying process, as users don't need to sign up for a crypto exchange or deal with crypto wallets, and they don't need to face the risk of losing passwords or private keys. They go about their investment in the same way they would when investing in stocks or other ETFs, through a regular brokerage account. Second, it also suggests that the provider, in this case Blackrock, believes in Bitcoin as an asset with staying power, and that is a big deal. In BlackRock's case, it's also a remarkable about-face. Back in 2017, the company's CEO, Larry Fink, called Bitcoin, quote, an index of money laundering. Now, no doubt with an eye on potential trading fees, he seems to have set those concerns aside.
So what that tells you is Bitcoin has caught the attention and the imagination of many people.
Currently, there are no spot Bitcoin ETFs available to US investors, although they can get exposure to BTC through futures Bitcoin ETFs, which track the price movements of Bitcoin futures contracts. These contracts are agreements to buy or sell BTC at an agreed price on a future date, regardless of the actual price at that time. As Motley Fool, an investing advice company, puts it, quote, historically, these products have struggled to accurately track the price. A spot Bitcoin ETF, on the other hand, involves the actual purchase of BTC in the spot market to back the shares of the ETF. Market rules dictate that an ETF issuer must hold an amount of the asset in question equivalent to the number of ETF shares issued. So, if BlackRock gets approval for its spot ETF, it's going to have to start stacking sats. Now, each type of ETF has its pros and cons, but a notable benefit to a spot Bitcoin ETF, like the one proposed by BlackRock, is that it would almost certainly come with lower fees than available futures ETFs. So, the overall benefits are pretty clear. A spot Bitcoin ETF would offer investors an easy, relatively cheap, and safe way to invest in Bitcoin. This would result in actual BTC being bought to back up the shares, which would, in theory, push BTC's price up. Now, let's move on to BlackRock and why this is such a big deal. So, as mentioned, BlackRock is the world's largest asset manager with around $9 trillion in AUM, assets under management. It accounts for around a third of the US ETF market. It is, in other words, a behemoth. When BlackRock files for an ETF, the markets sit up and pay attention. With a whopping 575 approvals versus one rejection, BlackRock also has an outstanding track record of getting its ETFs approved by the Securities and Exchange Commission, SEC, which, for those unfamiliar, is the body in charge of these things. Under its chairman, Gary Gensler, the SEC has, of course, been hostile to crypto. It's not only currently suing several major crypto exchanges, but has also to date rejected multiple spot Bitcoin ETF applications. By some estimates, BlackRock's Bitcoin spot ETF, officially called the iShares Bitcoin Trust, is at least the 28th attempt at launching such an ETF in the United States, with BlackRock being the 20th company to file for one. So why, with the SEC cracking down on crypto and after so many failed attempts by other companies, would BlackRock try its luck now? While we can't know for sure, there are some likely explanations, ranging from the general context to BlackRock's specific filing. First, there's competition from other jurisdictions. The EU just successfully passed MiCA, its landmark crypto regulatory framework. Europe is now ahead of the US in terms of creating a well-defined regulatory environment for the digital assets industry. The UK is making strides in this direction too, as is Hong Kong, the UAE, and others. US financial institutions could lose out as a result if the crypto industry exits the US for friendlier shores. Also worth noting is the fact that some other jurisdictions, for example Canada, already have spot Bitcoin ETFs available to investors there. Second, other TradFi players seem to be getting in on the act. Exhibit A, the special-purpose broker-dealer license secured by Prometheum, a supposedly crypto firm that no one in crypto had actually heard of until its CEO popped up parroting the SEC's line in front of Congress a few weeks ago. Exhibit B, the recent launch in the US of EDX Markets, a crypto exchange backed by Fidelity, Charles Schwab, and Citadel Securities. This was announced in the wake of BlackRock's ETF filing, though has obviously been in the works for many months. Then there's the SEC's supposed problem with all those previous spot Bitcoin ETF applications: manipulation and fraud in the Bitcoin markets. BlackRock, it appears, reckons it can put those fears to rest. This would, in theory, give it a greater chance of having its application approved. Now, it's looking to do this through the use of a surveillance sharing agreement in cooperation with Nasdaq and its surveillance capabilities. This move aims to address concerns of market manipulation by monitoring trading activity, clearing activity, and customer information. It could be a key factor in securing approval for BlackRock's ETF, as no other submission has included such provisions. However, not everyone is convinced that this will be enough to secure BlackRock the green light from the SEC. Appearing on a recent episode of Bankless, TradFi veteran Austin Campbell argued that previous applicants have also been willing to enter into such surveillance sharing agreements. It's just that BlackRock actually codified it on paper. Besides that, BlackRock's filing isn't all that different from previous ones. According to Austin and others, the real strong point of BlackRock's application is the fact that it comes from BlackRock. The fact that this biggest of TradFi beasts feels confident in its ability to safely offer a spot Bitcoin ETF is perhaps all that's needed. Others, like James Seyfarth, a research analyst with Bloomberg Intelligence, Natalie Brunell, host of the podcast Coin Stories, and Matt Walsh and Nick Carter of Castle Island Ventures believe that BlackRock might have received inside information from the SEC about what would be required for approval of a spot ETF, while also suggesting that the timing is somewhat favourable. As Seyfarth's colleague at Bloomberg, Eric Balchunas, puts it on Twitter, quote, "Our bull case for a spot ETF approval can basically be summed up in 4 words. What does BlackRock know?" Because, well, when you have $9 trillion in AUM and basically rule Wall Street, there's a decent chance you're privy to information that us plebs aren't. Adding to the complexity, meanwhile, is the fact that the custodian for the ETF's BTC holdings is none other than Coinbase. Now, on the one hand, Coinbase is a natural choice as it has an existing relationship with BlackRock. Coinbase has also worked hard to seek regulatory clarity and adhere to it. And it hasn't been mired in hacking or mismanagement scandals as other exchanges have. To date, its record is pretty much spotless. On the other hand, though, Coinbase is currently in the SEC's crosshairs. Big time. The SEC is suing the exchange, accusing it of operating as an unregistered broker and claiming that many cryptocurrencies available on Coinbase are securities. As podcaster Huff pointed out on Twitter, quote, "They could have gone with the safe option of BNY Mellon, USA's oldest and most trusted bank. But no, they went with Coinbase, a signal of BlackRock's confidence in the exchange." And now, onto a matter I'm sure most of you are curious about. What impact would an SEC-approved spot Bitcoin ETF have on BTC's price? Now, not financial advice, of course, but in the absence of some black swan event, SEC approval will likely push BTC's price up. If the SEC approves BlackRock's filing, it will likely approve other similar filings, given that BlackRock's could theoretically serve as a blueprint. Note, BlackRock's application has also caused a flurry of activity from other companies. Invesco and WisdomTree renewed their ETF applications in the wake of BlackRock's filing, while Fidelity has entered into the crypto marketplace business with the aforementioned launch of EDX Markets and, of course, its futures ETF. Other Wall Street names are also embracing cryptocurrencies. The mainstreaming of Bitcoin through these institutional investors will likely lead to a great deal of buying pressure, which would, of course, be positive for BTC's price, holding all else equal. Indeed, if you look at precedent, the approval of Fidelity's Bitcoin futures ETF marked the top of the 2021 bull run and brought in a record-setting $1 billion in 2 days. The launch of Bitcoin futures on the Chicago Mercantile Exchange, CME, also marked the top back in 2017. Memories. Of course, this time around, we're in a bear market, and it's perhaps unlikely we'll see such a flood of inflows, but it's still hard to see a bearish outcome if BlackRock does get the thumbs up. But what if BlackRock's application is denied, like every other spot ETF filing to date? Well, in that case, BTC's price is likely to take a knock, potentially cancelling the gains we've seen over the last week or so. It would also be hard to see any other spot Bitcoin ETF getting approved in the near future either. Because if BlackRock can't make it happen, well, who can? So, what's the process? And what is the likelihood of BlackRock getting its way? And when do we find out? Well, after publication of the application in the Federal Register, the SEC has 45 days in the first instance to approve, reject, or extend review of the ETF filing. Then they can extend multiple times with a maximum of 240 days, meaning that an answer is due by the 23rd of February 2024 at the very latest. But as James Seyfarth explained on the Coin Stories podcast, based on precedent, the ETF is less likely to be passed if it isn't approved before the first deadline, which is the 12th of August. So we can expect some price volatility around that date if we haven't had an answer by then. As for the likelihood of it passing, that really is anyone's guess. Adam Cochran, a well-known crypto commentator and investor, believes the odds are good. Bloomberg, meanwhile, puts it at 50-50, with BlackRock's status making the case for the bullish sentiment, while cautioning on the bearish side that Coinbase might not be large enough and is unregulated. Meanwhile, trading firm QCP Capital say it's, quote, unlikely due to Gary Gensler's anti-crypto stance. And me? Well, I am cautiously optimistic. BlackRock is BlackRock, and I find it hard to see why the firm would have submitted such an application if it wasn't very confident of success. Perhaps it sees a crypto bear market as the ideal time to strike and buy up BTC on the cheap. Mind you, it's dealing with the SEC, and as anyone in crypto will know, nothing can be ruled in or out when it comes to our favorite regulator. Watch this space, and we will, of course, keep you updated. So, that's about it for today. But what are your thoughts? Do you think BlackRock will get the nod from Gary & Co? And what impact will it have on prices? Let us know in the comments below. If you'd like to support the channel, like, subscribe, and share this video with friends and family. And if you happen to be looking for a hardware wallet to keep your crypto safe or an exchange that won't shaft you with fees, head on over to the Coin Bureau deals page. It has got the biggest discounts on the best crypto wallets and up to $40,000 of bonus airdrops on offer at the best crypto exchanges. Thank you all for watching, and I'll see you again soon. My name is Guy, and this is Goodbye.